It's Saturday the 11th of May. Recording this video for trading on Monday the 13th of May. Okay, dollar index, quick look at it. I like to follow this just for an idea of where the dollar's going. Don't actually trade the dollar index, but as I said on Friday, a break below the trend line looks negative for the dollar now, so we seem to be drifting lower. We don't seem to do anything particularly quickly in the dollar, but the hourly chart is confirming a move to the downside, or a small move to the downside anyway. I'm not talking an out collapse, because this is more of a sideways trend than anything else. But we've broken the short-term uptrend. You can see we got close to the 78.6% fib down at 97.10, 97.05. So the question now is, we've got resistance in the dollar index of 97, around 97.35, 97.40. If we hold below there, that would be negative. If we break back above it, then it looks more neutral. It looks like we'll just be trading sideways in that triangle pattern. It was a pretty quiet session for Forex markets on Friday. I talked about the Aussie dollar having a potential double bottom here, so at least some sideways trending activity, maybe even a break higher. So for now, we're holding the 23.6% fib at 70.15, 70.25. If you're a premium subscriber, you will have had a sell level here at 70.15, 70.25. So if you got short anywhere up to 70.18, that worked. We dipped down to 69.82. My first target was 69.90. So there was some profit in that trade. Not bad on a day when we didn't move much. You would have caught the most part of the biggest move of the day. That level still remains relevant. We're going to have to get up through 70.30 for this to look more positive next week. I've got to stop at 70.35, so that makes sense. We can then push up to 70.50, 70.60, and if we get up through there, we're looking really at 71.00, 71.10. As you know, I'm very much focused on the hourly charts at the moment, because there's just not enough going on the daily charts to let me to give me any ideas. The New Zealand dollar is holding below the trend line going back about a month and a half from the end of March, nicely holding that. We've got the 200-hour moving average also lending resistance to the pair. So I had a sell at 66.15 on Friday. I don't think we quite got there, did we? No, we got to 66.12. 66.15.25 was my sell level, purely because of what's going on with the trend line, the 200-hour moving average and the fib. Obviously, I had it a little bit too high, but we're not really doing anything. So those levels still remain the same. Obviously, by Monday, we're looking at 66.05, 66.10 as the resistance from this area. So we're going to have to push up through 66.30 for this to be more bullish next week. So if you sell around sort of 66.10, 15, stop above 30, it's a pretty low risk. But actually, I wouldn't be surprised to see us break higher. Dollar yen hourly chart shows a small double bottom here. We held the Thursday's low on Friday, so we've bounced back quite nicely. We didn't hit my sell level of what did I have? 110.15.20. We didn't get there. I'll probably have the sell level on Monday at sort of 110.15, because we've got the 100-hour moving average dipping there. And then if we get above 110.30, this is going to be a little short-term buy. I think we'll push up quite quickly to 110.55.60 at least. So if you're nimble enough to, well, if you try the short, you're going to have to be out above sort of 110.30, and then if it dips to 110.20, 110.20, yeah, 110.10, you can try buying along, seeing if that then holds a support and pushes us up to 110.50, 110.60. Hope that makes sense. Euro yen, I had a sell at 123.45.55, so that worked quite well. I managed to get on this trade myself. I missed that Aussie dollar short, but I got on this one. Unfortunately, I didn't run it all the way down to 123.02. Not a huge move. We did have targets of 123.25 and 123.10.00. So I suppose that trade certainly worked, and we bottomed exactly at the second target. Not a huge amount of profit, but that's all was offered, so that's all you can take. We've pushed back up there by the close. So I think this will push higher. You can see we've broken a very, very short-term trend line. Get up through 123.60 on Monday. We're looking at stronger resistance at 124.00, 124.10. That's probably worth a short, considering these markets don't move an awful lot lately. And see if we then dip back down to 123.60.50 for some profit taking. You're going to be wanting to buy a break above 124.20. that would be quite a bullish sign actually, and I think we can race up to 124.60, 70 quite quickly, and I wouldn't be surprised to see 125.00, 125.10. The euro, the Canadian, cable, pound versus yen all look messy, so I'm not even going to bother looking at those charts or wasting my time showing you them. I'll look at some other pairs. Euro versus the Aussie dollar's had a good run up. There's a trend line going back to beginning of December, which we hit and reversed on Thursday. Friday we had an inside day. So watch that trend line. It worked last time. 161.30, 161.35. Previous high 161.21. Okay, so if we break up through 162.00, that's going to look pretty bullish. We hold below 161.30.40. Then we can come down and test this fairly good support down here at around 159. Let me see, where is that? 159.25.15. Well, you can see the spike low got us close to 159.00, so we don't want to be below 159.00 if you are long. Not the greatest ideas, but certainly better than some I'm seeing in euro or Canadian. Might be worth keeping your eye on the dollar Swiss. We broke above this trendline resistance back in April and had a decent run up, but it wasn't to be sustained. That was when I was getting all excited about a potential longer term dollar bull market, which didn't materialize. You could argue that this is a double top, really. Peak at 102.26, peak at 102.35. Not a perfect double top, but you could argue it's a double top, and the low point of the double top is at 101.25, and that's been broken. So if you do believe that's a double top, then we've got the potential to drop another 110 pips from 101.25, so that's going to take us down to 100.15, which is just below the 38.2% fib. So that could be quite interesting. By the time we get there, the 100-day average will be around that area, offering some support. So this could be a trading opportunity. If we hold below 101.10, 101.20, it certainly could be worth a short on that basis. If you try the short, stop above 101.50, so it's a pretty low risk versus reward, and if it pays off and we do sink below, sink to our target, there's a good profit potential on that trade. Gold's been nice and easy this week, selling that resistance level at the trend line. We had a sell at 12.87, 12.89 on Friday, so there was a little bit of profit if you close that short before the weekend. As I've said earlier, you can only take what you're offered. It might not have been much, but at least it was a profit. Pressure remains to the downside as long as we hold below 12.89, as you know well enough by now. If we push high, we're looking at 12.95, and above here is a really good buy signal. I think we'll soar if we get up through 12.95, 12.96. I know the silver chart looks a mess, but we did figure out that we should be selling it anywhere below $15, and that's worked. Worked every day of last week, and then into the end of the week we sank down to 14.65. So if you've been playing that from the short side, it's worked fine. The silver chart continues to look negative. I expect it to go lower, which is one reason why I wonder whether gold will fail to beat that sort of 12.90 area, and gold will start to sink also. Considering all the turmoil in the stock markets this week, the precious metals have not benefited as a safe haven, whereas the yen certainly did. So maybe that tells you something about the state of the market and the potential weakness if stock markets stabilize. The outlook for oil has now become less clear. It seems to be moving sideways, so I'm going to have to focus on the hourly chart for this market as well, and we're just going to be trading in and out of the fib levels. So 61.60, 61.50, 62.50, 62.60 is holding it at the moment. If we push higher, we're looking at 63.30, 63.40, and then 64.10, 64.20. But direction-wise, I've got no clue. It's just really a case of scalping the levels. Even the S&P, I talked about the resistance and the Fibonacci level yesterday, which we didn't quite touch. But I did say that if we held below, let me just put the new fibs on here. I said if we held below the 100-hour moving average and the trend line, that we would sink, and we did sink. I didn't actually get a chance to sell it because I wanted it up here before I shorted it, but we plunged and we hit that trend line down at 28.26 it was this time, so bounced off it again. So this trend line really is working. The bulls are happy to step in when we hit that trend line, and wow, what a reaction on Friday. So now where the question is 28.85, 28.90. This is the resistance level, and clearly it did hold the bounce on Friday. We break up through 28.95. It's going to look more positive. We'll probably race up to 29.05, 29.15. We get up through 29.20, and then I think the bulls are back in full control. We could see 29.30, 35. We could fill, there's still a little gap here to fill up at 29, sort of 45, 29.50, and would not be surprised at all to retest 29.60. And then the question is, do we get a nice big double top sell signal, and then look for the market to plunge in the summer? A summer crash could happen. I wrote articles years ago about how crashes happen. People always talk about, oh, you know, autumn crash, and everyone gets nervous in October. It's not actually the autumn when the crashes start. The markets turn in the summer. It's usually July and August when the markets turn, and they've already been moving down by the time we hit October, and then October it just accelerates. News starts to catch up with where the fundamentals start to catch up with the technicals, and then you get the crash scenarios like we've seen in months like October 1987, for example. So just be aware of that. We could, if we spend the next few weeks rallying up to 29.60, and then hit that sort of June, and then start turning around in July and August, that would be a classic pattern for a crash. Dow Jones had a huge bounce back from that big support level down at 25.4. I think I adjusted it on Friday because we just missed my support buy level. Anyway, I think I had it at 25.470, or maybe it was 460. But you can see how well that level held. If you're trading the Dow Jones, hopefully you jumped on along there and rode it at least some of the way back up. The trend line here is working. So where have we got that trend line now? Around the 26.040, 050 level. This trend line doesn't seem to be having any effect whatsoever, so I really should just take that off. On the short-term charts, I don't think there's any extra information really. Okay, we've got good resistance up here at 26.145, 26.1, call it 26.150, 26.175. I'm regularly asked by my subscribers and my social media followers which is the best charting platform to use, or which one do I use in my videos, my daily technical analysis and trade ideas videos. So I just want to let you know that Metastock is something I've used for as many years as I can remember now. I've tried so many different charting platforms over the 15 years or so that I've been doing technical analysis, and Metastock is by far the best. The quality of the data, you've got to have a platform where you draw trend lines on different time periods, for example, and they all line up. I've had some platforms where you put a trend line on a weekly chart, you get completely different values than you do on a daily chart, for example. You know, you can't have that. You've got to have something that's absolutely top notch, so that you can trust the data. So without doubt, this is the number one. If you're interested in a free trial, you can just go to metastock.com/day-trade-ideas. That'll get you a free trial. If you have decided you want to sign up and give it a go for 3 months, you can get 3 months for the price of 1, which is obviously a phenomenal deal. So just go to metastock.com/offer/trial/3 for 1.